crypto and the technologies all combining into this kind of incredible world. It's amazing to be alive. It's stressful, it's scary, it's uncertain, but it's an incredible, incredible time.
Most people have no idea where the price is going over a short term. So what happens is you buy something, you put all your money in, you've saved up your $5,000, you put it all into Bitcoin. Bitcoin falls 50%, you panic, you sell it, you feel terrible. Bitcoin goes back up again, you feel even worse now. You can scrape together, you've lost, half of your money now, and then you keep compounding these errors, right? Well, you can trade a cycle, and that's okay. You can trade a cycle. If you want the dirty truth, you should never own Bitcoin. The actual truth is you should own alts or stablecoins, because when Bitcoin outperforms, it's generally when the markets are falling, and in which case you shouldn't own Bitcoin. You should just own stablecoins. And when the markets are in a bull run, generally the alts outperform, particularly the large alts, so like Ethereum, and therefore at that point you should own those, and maybe you should never own Bitcoin. Now, that's the extremity of the whole thing. So my view on this is, I think the space goes, the market cap of the space goes up 100x from here over the next 10 years. So call it from 2 trillion to 200 trillion. I mean, that's ludicrous. We've never been faced with an asset class that does that in all recorded history in a period of time like this.
Looking at those crypto markets, they're volatile, as we know. For me, they've all been following pretty much the pattern since that I've been looking at, which is that Ethereum now is following Bitcoin's pattern in 2017. Bitcoin now is following Bitcoin 2013. Solana's following Ethereum in 2017. It's weird. They're all so similar to previous network effect phases. Yeah. They're just in different phases, and these kind of corrections are pretty normal. I still think it's all to play for the end of the year. I think we'll see a huge run up in this stuff. Yeah, I mean, I was even expecting that we should see Ethereum having this kind of 20% correction. It should be a few days and then should rally again, because that's pretty much what Bitcoin did in 2017 after it had its corrective phase, got near the high, kind of failed at the high, and then rocketed higher. So it's kind of, it all rhymes a lot. And once you put it in that perspective, everyone can just relax.
Mythology of investing. The mythology of investing is hedge fund manager George Soros spots the opportunity, gets in at the right price, makes a fortune. The reality is most people have no idea where the price is going over a short term. So what happens is you buy something, you put all your money in, you've saved up your $5,000, you put it all into Bitcoin. Bitcoin falls 50%, you panic, you sell it, you feel terrible. Bitcoin goes back up again, you feel even worse now. You can scrape together, you've lost, half of your money now, and then you keep compounding these errors, right? It's called market timing, and market timing is extraordinarily difficult. I do some market timing because that's been my job, and 30 years I've done more than my 10,000 hours, a lot more than my 10,000 hours, and that doesn't make me very good at it either. I'm not bad at it in long-term investing, I'm terrible at short-term. So what is dollar cost averaging? Dollar cost averaging is basically what everybody does with their 401k. The problem is with 401ks or retirement funds is nobody cares about them. You don't know what's in it. You have no ownership. You just put some of your salary away and it goes in this mythical thing that you probably assume won't be worth as much money as you hope it is. That's what that's become. And you put it in every month. Why do you do that? Well, because you're averaging all of the highs and lows over time, because markets tend to do this. So you're kind of indifferent. In fact, you love it when it falls because you're buying more units at a lower price, because your game is to own as much as you can at the lowest possible price, purposefully. Firstly, I saw the vitriol of the Bitcoin community when I, in October, started saying the ETH chart looks pretty interesting and ETH Bitcoin chart looks interesting. People were angry. They hunted me down online, and I was like, that always makes me, if somebody says I'm an idiot for looking at something. It makes me want to look at it.
Borrow
money to buy something. So let's say you had borrowed to buy the original Bitcoin purchases. And let's say you put down half of the money. So basically at 27,000 or 26,000, you've lost all your money. Now, Bitcoin hit that. You'd have been wiped out. And you'd have had to pay somebody and you'll have been liquidated. And then Bitcoin goes back up in price and you'll have missed it all. That's what leverage does, because it's okay in a house because house prices aren't very volatile. So occasionally, once in a generation, you get a 2008 thing where the house prices start moving a lot and suddenly the people's equity in their house wasn't enough and everybody gets liquidated, i.e. the bank says, we want our money back. That's okay to take that risk if you're cautious in housing. In crypto, this thing moves around like this. Its predictability in the short term is extremely low, unlike housing predictability. Yeah, the 80-20 rule. I mean, this is like the dot-com boom. How many survived? Not that many. But, you know, yes, it's okay to play with these small ones, but you need to know what you're doing, or just take a very small position and realize that you're hugely speculative. You're trading penny stocks and they can go bust at any time. Or you can build a proper portfolio and think about risk management and understand that not all of them will work as well as you want, but you're going to only get involved in the top 30 or 40 coins, and then you may take an individual bet because you particularly like Audius or something like that. So see the onboarding, you know, NYDIG, all they're seeing is wall-to-wall requests, incoming, onboarding. It takes a while. People don't understand that, you know, for institutions to go, oh, well, we're going to buy Bitcoin. Okay, how do you mark to market it? What is the open? What is the close? Which price do you take? There's no single exchange. Then how do you custody it? How do you account for it? All of this stuff takes months of work. So you have to accept those things. So this thing starts tanking. Bitcoin starts first, then Ethereum rolls over later, and it's all down 50%. And I've got this weight on my shoulders. I've got all of these people that have been following me. I have been telling them this, but you know, it messes with your mind. And I pick out the one chart that matters to me, which is the adoption chart. Is anything that's going on with China and mining and this and that changing the adoption curve or not? No. So then, as you said, the relentless rise of technology continues. So just don't borrow money to do this. If I can get that across, then you don't care if it falls to 26,000 or 10,000, because you can buy more units at the lower price over time, and you don't care. And then when it's trading at 500,000, you'll have become extremely wealthy. It's as simple as that. Don't overcomplicate it. Don't think about derivatives, futures, options, none of it. Just stick with this simple plan. Don't use leverage, dollar cost average. Think about it as a 5 to 10 year investment, and your probability of success is going to be extremely high.